Great. Thank you all very much. Let's just get started. People will come back in as we go. This feels like being a High Court judge in the UK, or maybe a member of the Supreme Court in the US. I've changed my glasses so I can see the audience. My other glasses are only for reading. And that means that it gives me one major problem. It means that I can't read the questions that I have on my paper, but I can look at you and get some audience participation. So I thought to myself, what would Jean-Baptiste Pouchellet do in this situation? Would he put, Jean-Baptiste Pouchellet is better known as the great Molière. I see him in front of me now, hero of French theatre. Molière would say, don't look at your paper, look to the audience, look to audience participation, bring the people to this, to this desk in front, bring the people into the discussion. So we are going to have a free-ranging roundtable discussion on what is happening in sustainable finance research, the whole EU program of regulation around sustainable finance, the backlash, which apparently is being led by some guy called Donald Trump in the US, a bit of everything. Let's throw a lot of things into the pot and see where we arrive at the end of hopefully an interesting discussion here. And I'd love to have your questions, your thoughts for our panelists as we go. I'm going to try and marshal this in a way that makes some sense. So let's see how we go. Okay. We have...
Should we have questions in French as well?
Sure, we can do some questions in French if you like. That's a good idea, actually. Yes, why not? Why not?
No.
If you want to ask your question in French, if you're feeling a bit shy about asking your question in English, ask the question in French. And we'll translate the question, and then we'll get Rob to answer in Dutch. No, we won't do that. That would be a bit too anarchic. Okay, let's do that. Maybe just before we get into the discussion, I think it's worth just taking a step back and looking a little bit at what happened over 20 years. So some of us, and some people in this room even, will remember when we started talking about responsible investment, ESG, sustainable finance issues. We were really at a very early stage in trying to convince people in the finance world that it was the right thing to take some of the biggest environmental, social, and corporate governance challenges seriously in investment. And many of us used to spend the last panels at investment conferences in a room probably with as many people as this in, actually. Well, actually fewer, normally about 3 or 4 people after the rest of the conference had left, talking about the problems of the world, the sustainability problems of the world, in the context of talking to people in the finance world, many of whom were implicitly involved in those problems. Now, I say that because the finance world and the business world, of course, has an incredible amount of influence and power. And to a large extent, it also has a very, very significant influence over the way that politics works in our times. I think what happened is that we went from a very, very small base of committed people who wanted to make those arguments in the finance world, gradually building up over the years into something which became much more serious. And we could spend a long time discussing that, but I think probably the most interesting thing is that around about the end of the 2010s into 2020, we suddenly started to open lots of doors into politics, particularly in the European Union, understandably because politicians were grappling with those same questions. What do we do about the biggest problems that we have in our societies today, notably on the environment, and what is the responsibility of business and finance around those issues? Now we find ourselves on the back foot because that challenging of the political and economic status quo has received a challenge itself, which is to say, what should we be doing here? What should be prioritized in the societies and economies we live in? Economic growth or the major sustainability issues of our time? And I think to some extent, there's a lot of shortcuts in that, but we are there right now. And we have a big challenge to the way economic growth is being thought about. Even bigger challenges, I would argue, in terms of sustainability. So we're kind of arrived there. We've received this backlash. Now I'm going to ask our panelists to tell us what went right, what went wrong, and why over the last 20 years in a couple of minutes each. I'm going to start with Christel and then go on to Rob and work our way around the table. But just give us an idea of what you think we've done that's worked well in sustainable finance and ESG, and what hasn't worked well, and what we should do now.
Okay. I'd say one thing that worked well in sustainable finance is the link between academia and practice. We've spent a lot of time actually running after practice, observing what's done by fund managers, by asset managers, and always kind of being a step behind to describe and explain the new tools, the new funds that were made. And that was good for us to learn and for everybody to learn, but we cannot keep on doing that. I don't know a lot of other scientific fields where academics run after practice. And so probably what we should be doing better, and we heard some of it tonight, is be ahead of practice in some areas, particularly when we invent or propose new tools. I talked about the DCF and how that's a valuation tool that's not adequate today, but we don't have an alternative. I think something we should do as academics is invent the new tools. And yes, they'll be probably too much in advance compared to what could be done in the market today, but we need to think today about what can be done in the future. And Diane-laure, you're inventing new tools, you said, new products, etc. So that would be one point. I have a second one, but should I keep it for after?
No, go now, and then there'll certainly be more.
And the second point, and we may disagree on this, I think what we've done quite well is do research based on data, imperfect data, but data still, looking for a link between ESG and performance, et cetera, et cetera. But there's more to ESG than that, and what we probably should recognize in the future is that there's a very political dimension to ESG. It's not comfortable as an academic to acknowledge that. There's research on political CSR. There's no research, to my knowledge, on political ESG. It's not comfortable because it forces us to have a normative position when we would rather just look at data and say, this is what I observe. And so we need to figure out a way of how to do this. And just a quick example of something that circulated recently. There's a letter that's been written on SFDR, sorry. A letter that's been written on SFDR in the recent European watering down of regulation that was signed by, I think by now, about 500 academics, telling the European Commission this is where we see problems in your revision of the regulation. And I think it was a great statement. I was really thrilled to see academics coming together and state that. And it's giving a political dimension to our research, something we're probably not comfortable doing, but might need to address in the future.
Great, thanks for that, Christel. I'm going to ask Rob to speak next, but I just realized actually, I don't know if Mireille, do you want to come up and be part of this, or maybe we can bring you in. Okay, that's you're right, and that sounds good. But I don't know if Ben is around as well. Definitely, if Ben's still here, happy to bring Ben in as well. Ben, if you want to come up, or we can bring you in from the audience. Rob, over to you. You've been around this field for a long time. What are the things that you think that we've done well, what badly, and how should we be thinking right now about the current situation in terms of sustainability and sustainable finance?
It's a big question, not easy to answer, but
it's a big question, a big university. We need to, there's some big answers.
So if you look at the finance domain that I'm part of, can you imagine you're in 2000 and you're working on sustainable finance research, and your colleagues who are working on Garch model and conditional volatility models and stochastic volatility models, they look at you what on earth are you doing, Rob? You know, that was the situation back then. And we essentially, with a few others also in the UK and in Europe, started this field. So that's a good thing, to start a new field that makes sense that it exists. So I think that's definitely a good thing. But it was just the start. In my view, what is more important is that we got the mainstream finance academics interested. So we got a few Nobel Prize winners interested in this field now. Oliver Hart is really interested in this field. Bob Engel, he used to be the stochastic volatility and gauge model econometrician, is really into this field right now.
What are they interested in, Rob? Why are they interested?
In the case of Oliver Hart, is because he really likes the topic of democratization of finance. You know, he's like 85 years old, and he started thinking about doing deliberative forums among mutual fund clients, for instance, in the US, of all places. Of course, he's from Harvard, so that makes it really interesting. In the case of Engel, it's more like understanding the asset pricing process by taking climate change-related shocks, etc., into account. But that is still very narrow. It's just finance. I think what is really important is that we bridge the gap between finance and other domains in economics, but definitely also outside. I think Ben's team shows that really well, where they have specialists from all kinds of science. I mean, economics is also a science, but you know, science, if you understand what I mean, like biologists, physics, math, etc. To connect those two fields is really important. And then finally, on the good thing still, I think it's good that universities work together. There's the FIR-PRI Academic Network, where Ben and I also set up the Global Research Alliance of Sustainable Finance and Investments, GRASFI, where also universities meet every year in a big conference where PhDs have workshops. So we train the people, we meet, which is really important. That's on the good side. Did Christel actually say something on the bad side already?
I said we're running after practitioners.
Oh, running after practitioners. Okay, we're going to check.
And we're not very normative, but we're going to change that as
well.
Okay,
the normative I have an issue with, but on the
just
bad,
explain to us what you mean by normative. There, I know this is. It's always a good time to get academics to explain what they mean. I think, you know, what's that discussion around?
Well, I think the way I interpret your remark is that you bring politics into the discussion, so that you have certain ideas on where it should go.
Yeah, but because very often too, and in finance in particular, we'll say we're neutral, we're objective, this is just data. But nothing is neutral and objective. Everything is political in the sense of determining a way that we want to live together in society, and recognizing that when you use any type of formula in Excel, you're actually performing a certain way of living together. So you're normative, but hiding it. That's kind of what I want to say.
I noticed this interesting tension in quite a lot of the discussions that we've had today between the expectations of society around big sustainability themes. And we could list them up. We had some of them today: biodiversity loss, nature degradation, climate change. If you were talking about, I think Ben mentioned earlier, technology and some of the dangers there. And then this divorce, it seems, between the way that the economy works and carries on, almost independent of all of these discussions. Is there a resolution of that tension, and where does it lie, Rob?
Well, first of all, there is no planetary government. So we only have national governments, and even they don't really function well right now. In many of the countries, probably including this one, I mean, you know. But in the end, you will have to solve many of these issues with some legislation that we as the people like to be in favor of. You know, the representatives for us should make this legislation. I don't see this happening. And there are all these competitive issues, like the US and China not doing stuff that we're doing in Europe. How in the long term this will work? I really am pessimistic about that right now.
Okay, let's bring in Diane-laure. What's your sense of what has worked in the time that you've been researching ESG issues and actually been led to demonstrably interesting outcomes? Ben posed the challenge earlier. How do we know? How do we know what has been theorized about, talked about, often brought into practice, but not yet demonstrated any outputs. What have you seen that's worked? What have you seen that hasn't worked? And what should we be thinking about right now?
Yes, just to follow up on the conversation, is it working?
I don't know. Yeah, try it again. Yeah, can we check and see if the mic is working? Oh yeah, take that. Go freestyle.
This is working? Okay. So I think we've been really good at mainstreaming responsible investment, and then that's been the goal of the Principle for Responsible Investment, FIR, and that was this conversation showing the maturity of it, and that's why the first veto of President Biden was on ESG. Like I would have never envisioned 20 years ago that the first veto of a US president will be on ESG motion. And so I think we've been really good at that. But by doing that, we forgot that there were some values embodied. So in the 1960s, portfolio theory, there was a model of society where you could progress. Like at this stage, you were a middle-class family, you could send your kids to college, you know? And today, many of you know Thomas Piketty's work, that there's some inequalities in terms of redistribution of capital. And I think what's going on right now in the US backlash, but it's not only the US, there's a backlash in Europe as well, is this re-engagement with the values and what type of society we want to engage with. And so I think what really matters right now is to strengthen the community and maybe hold on to our values. What are our collective agenda? Which type of society we want to push forward? Because I don't think we should take for granted the wins we have had over the past 20 years. They can disappear very quickly. So I think the strengths we had is now a weakness, you know, and I think we need to re-engage with more. I would not say sometimes politics is different. I would say police, the democracy, the society we want, because this is what they did in the 1960s when they built the financial markets. They had to really keep values there. And so I guess we need to engage with a different agenda and support our colleagues as well in North America right now that are under threat. They are being dismissed, they lose their jobs when they work on sustainable finance, and that's the reality of today. And I think this is where Europe can play a big role of support to these communities as well.
Okay, Andreas, do you want to pick up those points as well, and maybe then just give us a sense also? You've been deeply involved in the work that the European Union is doing to try and answer some of these questions. Give us, in as simple a way as possible for something which is very complex, give us a sense of how that is moving forward.
Let me check it. Is the mic working? I think it is.
Yeah, the mic is working.
So I would first like to point out, following from Rob, that there are 3 countries in the European Union that do not send a single MEP to Brussels that's more right-wing than a standard conservative. That is Malta, Slovenia, and Ireland. In Ireland, we do not have an AFD or a Front National. It doesn't exist. So it's a very different climate, and we very much enjoy that. We were the first ones to divest fossil fuels from the National Sovereign Wealth Fund, and as of today, the common problem we have is reunification, but nothing else beyond that. So to look at what has worked well and then also what has not worked that well just yet, and I'll link back to previous speakers further. So when we looked at the regulation, if we build tools that are scalable and that are cost efficient, that has worked very well. Paris line benchmarks are 180 billion. They evidently have reduced finance emissions a lot, no matter what simple talking points other people may say.
Just explain in a simple way for people what a Paris-aligned benchmark is.
It's a portfolio that decarbonizes 7% year-on-year in equities or fixed income. And the totality
by expectation.
Sorry?
By expectation, then.
No, by actual. Yeah, the actual emissions decline 7% year-on-year in equity or fixed income. Thereby, the emissions go down massively on the financing side. There isn't even any proposal to revise that legislation. That's just there, and we develop more benchmarks, but we develop them in a way that they are scalable and cost efficient.
So just to be clear, it's an index?
It's an investment philosophy.
Okay.
Can be index, can be active, you choose. But the key points here is that it only has 2 or 3 metrics, 1 key metric and a few other exclusions. It's not very complex, and it's very, very scalable.
So, okay, so this is an example of the kind of product you think we should be thinking more about to start to meet some of those challenges.
We need to think about tools more.
Okay.
Tools work, reports tend to not work. So a report tends to go on the shelf, the next government will change it. It's just a report, it's nowhere. You write a tool that is scalable and that is cost efficient, and it has a fair chance of working. I'm not saying it always works. So the EU Green Bond Standard is probably at this point slightly too expensive because some of the actual criteria in the taxonomy are slightly too tricky, but there is a lot of interest, and we have seen issuances from anyone. Most notably, the first European city to issue an EU Green Bond is Madrid. The mayor of Madrid that got all the extra financing in his election campaign said climate change is witchcraft. So basically you get a hard right mayor that says climate change is something for communists that then actually use an EU Green Bond to raise the capital.
So just to be clear, this is companies and cities that are effectively raising money from investors, or whoever those investors may be. It could be the public, could be capital markets, for sustainability or green initiatives.
Companies, cities, financial institutions. So even universities could if they wanted.
Okay.
Now, but you have tools. And tools, if they're designed well, they're scalable and they're cost efficient, they can lead very far. Take as an opposite, and I think that letter, Christel, was on CSRD that Andreas Hoepner led, and we looked at it also academically in a paper with him. So CSRD has that, double materiality, which is a great concept, but double materiality testing is incredibly expensive.
Does everyone know what CSRD is in the room? Just quick show of hands to people just to get an idea of, yeah, okay, so most of the audience is well versed in corporate sustainability reporting as per the EU directive.
Yeah. So it is double material if we, for instance, mandate gender pay gap disclosure. That's by definition double material because it's not necessarily financial material, it's good for impact. But to test double materiality in absolutely every context is simply a revenue feed for auditors. And the actual revenues of auditors is the cost burden on the other side when it comes to competitiveness. So when we looked at the EU proposal on CSRD in the paper with Andreas Hoepner, we would determine that you can actually save money on the whole cost burden if you were to get everybody to report with more than 500 employees, but only audit for companies that are more than 5,000 employees. So in many ways, what we often forget as community is things have to be scalable. Having the beautiful case study is nice and academically easy. We write case studies, we teach them. Many of our papers are essentially case studies and data sets we never reuse. But for actual policy, for real large-scale impact, rather than small-scale, I tell myself I'm great impact, we need something that's scalable and that's actually cost-efficient.
Okay, great. We'll come back to some of that afterwards, Andreas. But I want to bring in Ben, who laid down some pretty significant challenges, I think, in his acceptance speech earlier. And I'd love to get your sense of what we've done right in the last 20 years, where we've gone wrong, and how we might correct course. And I know that's a big question. Just try and keep it as simple as we can, and then maybe we can develop those themes a bit. So 2 minutes just to distill the entire world and sustainable finance.
Thanks for that, Hugh. I'll try. I mean, I think things that come to mind that I think have been successful on their own terms are things like central banks and financial supervisors working on climate change, particularly microprudential regulation. And I've done a lot of work with banks, globally systemically important banks in different jurisdictions. And that has genuinely changed how banks, essentially the data and analytical plumbing and accountability mechanisms within those major financial institutions. So in the past, they wouldn't really know how much physical risk, for example, they were accumulating in their loan book and where it was being added on. Now they can do that more dynamically. And if you believe that pricing these risks is important for capital allocation, then that's a useful thing. Clearly, that's not going to achieve net zero, but it's a significant improvement on what happened before. I think there are a couple of, the origins of that go back to kind of 2012-13 when A few of us were engaging with central banks on climate, and then obviously you had a lot of things from Paris 10 years ago, including the FSB and the Bank of England, the Bank of France doing stuff on this. I mean, two other things coming back to Paris 10 years ago that I think we should reflect on. I mean, one is obviously going for disclosure and TCFD, and then issues around disclosure versus data. And I was just having a conversation with somebody offline about that. You know, we have conflated the data problem with the disclosure. You know, how we fix the data problem is not through disclosure, actually. And there are other ways in which we can get data. Disclosures, I think, are very useful when we're thinking about committing organizations to strategy and having public accountability. But in terms of the actual information that's provided through a TCFD disclosure, or indeed an ISSB S2 disclosure, you know, this goes through the investor relations department, the marketing department. It's the best version of the company. It's backward-looking. It's, you know, not every company discloses, et cetera, et cetera. So really still big data problems resulting from this confusion, and also a mistake that was made, which is essentially the reason, you know, the TCFD was created was that at the time that was the only thing they could get through the FSB. You know, it wasn't the most important thing. It was just the thing that they could get through. So the politics of that, and then the other thing, you know, the original sin from Paris was essentially, you know, basically a lot of people in this community, but also a lot of people working on corporate climate action, basically going, okay, well, we've got this 1.5 degree commitment that applies globally, and let's downscale that to organizations, firstly to companies and then to financial institutions. And that kind of misunderstands the nature of the climate problem. And as a result of that kind of misunderstanding, we have created a whole bunch of infrastructure and architecture that is on very shaky foundations, and there's kind of a lot of it starting to creak.
What should we have done then, Ben? We had this big international conference around in Paris on reaching an agreement to effectively limit emissions rise to between 1.5 and 2 degrees. What should policymakers have done then to start making more meaningful change from those people who do that emitting, which effectively is companies, us?
I mean, any number of policy instruments could be employed to reduce emissions, and we know what the toolkit consists of. And the answer is not just, oh yeah, global carbon price. I mean, it's obviously more nuanced than that, but it's not very difficult. You know, you create cash flows for the things that you want to see invested in, you create regulations and price signals to close the stuff that's creating the problem in the first place. And obviously much more emphasis in terms of the climate problem should be placed on phasing out and closing down the polluting assets. That is what's causing the problem. You can't build your way to net zero with wind farms, although wind farms are important for displacing capacity. The thing that will get us to net zero in large part is closing down the fossil industries.
And have investors been contributing to that or against that?
So this is the point, right? You know, financial institutions have kind of, partly because of NGO pressure, partly because they're not really thinking about it very much, have bought into this idea that, you know, let's do a Paris-aligned portfolio, sorry, Andreas, or some equivalent, and then we're going to exit a bunch of stocks, and we're going to make it somebody else's problem. You know, has the real economy decarbonized as a result of any of that? No. There's a really strong case to be providing capital to polluting companies so that they can become more sustainable companies. And I think this is where we get into climate transition planning and transition finance and making sure that's effective and credible, which I've been doing a lot of work on. We can talk more about that. But I'd also just say that, you know, some of the things that I'm kind of alluding to are things like, you know, 1.5 degree targets for organizations and for, you know, that has issues. And then you port that over to financial institutions and has even bigger issues. Now on the organizations, companies, what we should be expecting, what we're trying to do with companies is to get them all to achieve net zero as quickly as they reasonably can do, right? You don't need a temperature target. A temperature target just confuses the hell out of everyone. The objective is for these companies to achieve net zero. Now, it's going to be easier for some companies in some sectors than in others. Obviously, geographies matter too. But how do we, as policymakers or as financial institutions or as concerned citizens, unlock the barriers that enable those companies to achieve net zero as quickly as they can? And that's what we should be focused on. And yet we've created an infrastructure that obfuscates that's the basic problem. Let's focus on that problem.
Okay, Rob, I'll bring in Andreas in a second, but Rob, I'm just interested in dovetailing what Ben just said with the research that you've done with people's money. So you talk to people who are saving for their pensions in big pension schemes. What do they think about climate change and whether they should be invested to try and do something about the problem or not? What's that and other sustainability issues?
So if you start talking to people, you first have to ask yourself, which people are you talking to? So if you do, like a lot of organizations do, create client groups or focus groups, you get this selection bias that I talked about. So those people are interested in the topic. But if you look at the average person in the fund, like we actually got in this deliberative forum, at the start, not a lot of them have any clue about finance, about pensions, or climate change. And it actually strikes me in the discussion so far that we are so focused on climate change, and that topics like social injustice and all those related topics are not popping up automatically. So it already shows that, and I think the people in that room that I had, they were talking mainly about the social injustice issues and way less about climate change. So there's a lot.
Why do you think that is? That's always been an interesting tension around this area, that for some reason the discussion has leaned towards climate, which is, I guess, a more empirically based science discussion in a sense, but political as well, and yet away from issues of inequality, social justice, labor rights, human rights. Why?
I mean, social injustice you feel right away, right now. Climate has some psychological distance. You can talk it away as an individual, or it's far ahead if you're young. Although the young seem to care more about it than the older people. Actually, the people with lower income also care more about it than the people with higher income. Very interesting as well. So yeah, why that is, I'm not a sociologist, but my idea is that it is very close to them. In Dutch, we have this really nice term called bestaanszekerheid. Can you get through the month with your salary, more or less? That's a big issue for a lot of people, even in the Netherlands.
Yeah, thanks for that. Andreas, let's bring you back in. I'm going to try and put the question in a way that maybe gets some sort of useful answers. Is what's happening at the European Union level going to lead to change? And I mean, let's just take the issues that it's predominantly looking at. So energy transition, climate change, reduction, and a structure that leads to meaningful investment decisions on both of those.
Yeah, let me come with the key practical element that academically we like to just assume away. Do we have the votes in Parliament? So we had a social taxonomy, we were nowhere near the votes, right? The fractions on even the mainstream parties on social injustice are far too big to get a social taxonomy. We talk about climate change because the mainstream parties are broadly agreed on climate change. The far right isn't, but pretty much everybody else tends to be. Now, if we were, and that's often the economist argument, put accurate carbon taxes on everything, we wouldn't need anything else. That is theoretically correct. Practically, we do not have anywhere near the votes to get anywhere close to these carbon taxes. So while, of course, Ben may have a lot of better ideas for policy than a bank decarbonizing its portfolio, the best thing the bank or the pension fund can actually do themselves is exactly that. Reduce the cost of financing for coal, oil, and gas to then increase the chances that over time they're shutting down. Because I'm fully agreeing with Ben, the most important thing for the Paris Agreement is shut down coal, shut down oil, make gas more efficient, or potentially shut it down. The IPC has written it out very clearly. So the question is always, academically, a little bit in our ivory towers, we can have all sort of debates. If we're miles away from the actual political reality in terms of the votes, we'll find it very difficult. And
do you have a sense, Andreas, about what we might do to try and get closer to generating that political will for what we're thinking about doing here?
Yes. So some academics become politicians. Not that I'm going to do that, but
I think maybe
frankly speaking, right now you have a scenario.
you can tell us now if you want to run for
No,
Taoiseach.
no, I will definitely not do that. And I'm very pleased with the Irish politics. But if you just look at it right now, in most European countries, rural votes count a lot more than city votes for the MPs because simply there's lesser votes for one MP. So that benefits parties that sell to rural voters that feel left behind, very simplistic messages, often far-right messages. Now, it is the reality of the democratic system that it was designed in many countries years and years behind. In many countries, it is a winner-takes-all, which is not ideal from a democratic system. It's not transferable votes as we have it in Ireland or New Zealand has it. It doesn't necessarily lead to coalition governments. It can lead to dominate governments. So to get the actual political will in the European Union, you frankly need to have sufficient votes in the parliament and reasonably well-organized processes in council. Now, right now, Denmark is running the council. We in Ireland are going to run it in a year, but just before Denmark was Hungary.
No, it makes it difficult. Let's leave it there for the moment. I want to bring in Christel, because Christel raised a lot of really interesting points earlier about, I think, this shift from what many people think when they get into sustainability, sustainable finance, ESG, becoming a professor of sustainable finance at a university, which is you go in with a set of values about things that you want to see change, and then you meet the resistance of the finance world, which forces you to change your own direction somewhat. What can we do about that? I mean, isn't that just the natural way of things, that you have to adjust and find positions that can do both? Or what's your feeling there? And it ties in a little bit to the political point we were talking about, which is how do you generate political consensus around the importance of these sustainability themes over growth, which is what we're talking about here.
Allow me to take a bit of a twisted road to answer your question, but I'll get to it.
This is Belgium for you.
Eventually. You're making me think about a theme that came up in several presentations, which is the value of and importance of collaborations. And it's very fitting because tonight we're celebrating a network, right? And the fact that the political level is important, but in the meantime, it takes time, it's confusing, the general public doesn't understand it, no retail investor is interested in CSRD, SFDR, et cetera.
But they're quite interested in sustainability, aren't they? I mean, I'm always amazed by how much retail investment has stayed in sustainability funds despite the backlash. It's an interesting phenomenon.
And so you need these intermediary levels, I think, which are collaborations between different actors, between asset managers. That's why I'm particularly interested in not-for-profit labels, because it's, at least in Belgium, the financial market that gets together and that sets a market standard or an ideal of what we want to consider as sustainable, and then translate it to retail investors and reaches a consensus every 2 years on how do we step up a bit in our requirements. And the link with your question is that these collaborations, they can go faster and they can also be democratic in the way they take decisions. And there are also places where there can be dialogue, debate, and reminding ourselves of our values when you put several people around the table. So I think being a big group who discusses has a lot of value for that. And I was intrigued and worried by your presentation then, because you showed us...
Worried?
I was worried too, Rob.
Not by the results, because you showed us that when you had your mini group and you put them in a room, if I remembered well, they actually moved on to more of a consequentialist approach. They were focused on results rather than values. And then talking about it together led them to take decisions where they moved away from each of them from their values. Maybe that's great because it was less polarized, but they were more focused on, let's look at the consequences of our actions. And so for the first time, you got me thinking, maybe this middle level where I'm putting all my efforts, where people dialogue, where they reach a consensus and move ahead while we wait for politicians to take decisions, maybe there's a risk there too of being consequentialist or losing values or whatever. We'll have to talk about that more, I think.
Great, thanks for that, Christel. I want to bring in Diane-laure now, because I think the nature topic that she brought up earlier is one where I think when you talk to a lot of people and they think about what's important to them, they think about the rivers near where they live, they think about the air that they breathe, they think about the nature that they love walking in, they think about the future of their children in their environment. And what I wanted to ask you is, how do you see that squaring with the financial system that we have right now, and what might we be doing more of that could be interesting? I know you suggested the nature investment theme. Many people I know, they just say, well, this is for governments and this is going to cost a lot of money to do this. It's not for finance to be involved in. That's the kind of flat response usually.
And I think this is interesting, and I want to maybe here in Europe, we're really privileged. You know, climate change is recognized as being a thing, a real thing. There are many countries in this planet which is not the case, and where people still have to fight for climate change to be recognized. And so I think it's interesting because the story of this bond is this story, because in Canada right now, as I was talking about my students, when my students come to my class, they make a courageous decision. They might not get a job in the US because they have that in their transcript. So it's a courageous decision. You pay $50K to get your MBA, and you choose to get an elective, and you might not get a job in the US, you know? And so I think it's really important to realize that this is happening right now, you know, and I'm just 6 hours fly from here. So I wish that was just the conversation we had overseas. That will be wonderful conversations, but our worries are much deeper. And I think it's really interesting because this bond came from the fact that investors didn't want to invest in nature-based solutions because they came like that. They say, we need scale. We need $100 million if you want to invest. We don't want to now, we no longer want to disclose ESG because our headquarters is based in the US, besides a few Quebec organizations. Now the Anglophone Canada pension funds are withdrawing from all the climate disclosure, all the climate commitment, not because they don't believe in it, it's because the US headquarters and the lawyers say you should not do it anymore. So this is a story of people who took matter in their own hands. The indigenous leaders, the community leaders, the conservationists, the climate scientists, they say the government will not help us because government doesn't help. In Ontario, it's right now a Duke for government, it's a conservative government. They don't want to protect the environment. They actually passed a law a few months ago that prevents, that allows developers to build without having environmental decision anymore, you know? So this is not where we are right now, at least overseas. And so this project is about those people taking this matter and creating the financial product. And they could do it because there's a loophole in Canadian law where you're a non-for-profit, you can issue a financial product to accredited investors without the approval of the financial markets. And this is all what we do in the lab. We just find loopholes, and we create that, and then it's been replicated, and now we have that. And so for me, it's a lesson, you know, because if you keep following what investors want, what the rules are, especially when you're adversarial environments, you won't do anything. So you cannot wait for scale. You have to do it first, build the tool, and then replicate. And I think it's a lesson for us as well in Europe, because this is what people do because they believe in it. And what is, I guess, the most interesting right now is the indigenous leaders. As you know, they're critical minerals right now in Canada, and this is a very big deal, and probably Portfolio is investing in this. But the indigenous leaders believe in sustainable finance. They believe in it. They develop their own metrics. They develop their own leadership and their own groups. And I think they don't think about those disclosures, those conversations. They just do it because they worry about their generations. And they believe they're the steward of the land. So there's no conversation about what is a disclosure, what is the scale, what the financial. They say we just have to do it. and let's go and let's listen to the land. And so I think this is a big lesson, is that we don't have time to discuss this or create the best metrics. Like, we have already bridged our planetary boundaries. The climate change is not tomorrow. It's not for tomorrow, it's today, fires. So I think this is a lesson. We should not wait, we should go, just channel your money towards nature-based solutions and make it happen.
Oh, great, thanks for that, Diane-laure. I'm going to just try and have the last part of the discussion here on a kind of positive note, because I think I've spent most of my career being what we call a cynical bastard, really, as a journalist. Quite often you're writing stories that are kind of looking at the negative side of life. So let's try and be a bit positive to the end. Actually, I'm here in Paris next week chairing a conference, a green finance conference at the OECD. And I think sometimes the interesting thing that I get out of some of these conferences is that there's actually quite a lot of will from governments to think about how they respond, particularly to the environmental challenge, but also how they work with the finance world on both solutions to climate change, investing in a competitive energy transition, which I think is probably one of the biggest discussions that we have right now globally. What is the energy transition going to be? And if you like, in the economic parlance, who is going to win from that? I think maybe I'd like to ask the panelists where they think there are opportunities for finance and investors to actually be working with governments on a much more interesting basis than they have been to date, maybe. Ben, do you want to kick off? Are there areas where you think we should be thinking much more smartly in finance about how we can ally public-private partnerships with governments for sustainable finance?
Yeah, thanks, Hugh. I mean, I think when you look around the world, in developing countries and emerging economies and advanced economies, every geography, financial institutions, whether they're private or public, are absolutely key for governments to deliver on their various policy objectives, whether that's on climate or the energy transition or AI or, name your thing. And in a context where there is less public money, I think this becomes even more important. So there's obviously an important dialogue that has been ongoing and will continue to happen between governments, public policymakers, and financial institutions about societal objectives. And so that isn't new. And if you think about every country that's achieved economic development, pretty much, they've marshaled domestic capital, international capital, and created financial institutions to achieve that. It's been an absolutely essential part of achieving it. So I think, this observation, this point that I think was made earlier about some people saying, well, finance is neutral, it's just a servant of the real economy, it makes no difference. That is not borne out by economic development, the development trajectories of different economies and what we see. So it's a long-winded way of saying there's an awful lot of space for us to play in if you consider part of our role as being that intermediary between finance and policy. That's one of the roles this community plays.
Thanks for that, Ben. Let's just take some questions. Mariella, do you want to grab the microphone and just if anyone else has got any points that they want to raise, now is the time. Raise your hands. We'll bring you in. Mariella.
I'm not a sustainable finance scholar. My field is managerial behavior, so that's different. But what I think is intriguing in your discussion is that you seem to have two different perspectives. Like, can you work within the system to actually address all these sustainability challenges, whether they are climate change, biodiversity, or social injustice, or do you need to, like your story says, do you need to break it? And I'm kind of interested because your OECD question also assumes that you could actually make progress towards your sustainable goals from within the system, playing to the system's rules, while your story signals clearly that you have to think much more creatively and challenge the assumptions on which we've worked. And I think Rob's story also a little bit in democratizing finance. So I would rephrase your question rather than say, how can you work with governments? What are the the crucial assumptions that we're now making in the existing systems that need to be challenged in order to really progress and innovate in this field?
I think it's a good point, Marielle. I mean, in some ways, I think I'll answer the question, why not? I think in some ways Rob's point about the tragedy of the global commons is one of the real major issues there, because we don't have an international government. So we have a world of competitive nations. They're a bit like competitive companies in many ways. And when quite often, if you regulate one, someone else will take advantage of the regulation across borders. So you end up having arbitrage that happens on all sorts of different levels, and that can often be the problem, and trying to find a way of working around that arbitrage is quite difficult. Were there other questions in the room before? There's one there in the middle and one at the end. We'll get, I don't know if we can get a microphone to you, so you might just have to stand up and shout or come to the front. Matt, do you want to jump up, and then we'll...
I'm struck, as I think 20 years into this, by something that I feel like we're missing. And I said it 2 weeks ago, I saw Andreas at Oxford, we had a similar kind of discussion. I feel like we're missing the street fighter. We think about Manga, Charlie Kirk. I feel like we are caught up in our improving the academic arena. How do we find a way to make our case on something very difficult? Social issues versus climate issue, very hard. I'm just wondering if we need to be a bit more street smart in how we approach this and try to win the game of perception. And be a little bit more, when I remember being in the Milton Forum, the CEO of the White Pension Fund said, "Man, I love ESG. Oh, I love it. Energy, security, and guns, give me more of it." and those are short, quick sound bites. I don't think we have sound bites. I don't think our industry plays that game enough. And I think we have to find a way to do it beyond the Greta world, right?
Yep.
It was one way to approach it. And I just feel like it's a missing game that none of us play.
No, that's a good point, Matt. Let's take Mark. I think that's you, Mark. I can see there in the background. Do you want to jump in with your question as well, and then we'll take it, and then we'll bring in the element I introduced as well. If you've still got the question, jump up and.
Yes, thank you, Jeroen. I want to follow this. We are shareholders in the oil and gas industry. We see enormous backlash in the US, but the majority of institutions of Mexico are. You can get sued in the US if you even talk about ESG. So we don't expect anything from the US in the next years.
Okay.
What can the European investors do to act against that?
Okay, let's leave it there. So we've got a bit of street fighting. We need some robust street-led, if you like, grassroots politics with some energy and some street smarts. We need to let's take the last one. Go on, then we'll have one last question. You've got to have to shout it out though. And
yes, I'm working with politics too, so I'm really biased here. I just want to make a point that I hear a lot of depressed comments around how ESG would be weak or rotten at the middle if there was a flow in the beginning, etc. I really do think, I was into it in 21 when we were riding the high tides, and I must say that 21 is also the year where oil presents its deepest valuation. The problem is that anti-ESG is funded by oil money. So why not simply happily wait for the oil money to go scarcer, because it's ongoing. On next year, the barrel is expected to be something like $50. It will be dark days for oil money, so it will be good days for ESG. Why not stand still and be happy about the future?
No, fair enough. It's a fair point. It's one that I have a lot with my father, who is an oil engineer. So you can imagine we have really good discussions over Sunday dinner. But let's take some of that. Rob, do you want to jump in first? What can investors do, and what about the whole kind of energy street fight, political invigoration around sustainability?
The way that Matt framed it, he did not just address it to investors, but also to academics, correct? So I think it's really tough. I think as an academic, you can definitely be street smart, but then on the academic issues, but I think you cannot start being some kind of protagonist of a certain topic that you cannot prove wrong, because that's what academics do all the time. You prove stuff wrong, come up with new theories, try to prove them wrong again, new theories, etc. So I think you have to be careful to go in the direction that I'm saying ESG is fantastic no matter what. And I think coming back to some of the other questions, I've seen in the past, let's say 5 to 10 years, a lot of people hallelujahing on ESG that were the same people that told me 20 years ago what kind of a crap stuff I was doing. So I'm missing in a lot of organizations the authenticity about ESG and the products that they are selling. So it's not so much about street smartness, I think. It's authenticity. And, if you give me half an hour with ChatGPT, I can come up with some acronyms that also are cool, just like your ESG example. I don't think they will win the war. I think...
Is this a political authenticity problem, though, Rob? That we don't have politicians who want to agree?
Yes, that's a different topic. But with authenticity, I mean that if you're selling a product, you really believe in it. You did your due diligence on what you're doing. You are not over-promising. Like I said in my speech, you weren't there yet. I said, high return, low risk, great ESG outcomes, and fantastic returns, and everything is fantastic. It's not possible. And as long as you keep on saying that, I think you...
That's what I'm saying. I think we need a different game. That's exactly my point.
Yes. Okay.
We have the game right now, but what the alternative is...
The game is not about returns, indeed. The game is about much bigger.
Rob, just out of interest, what should investors be doing about oil lobby money, which is, well known? They're running governments, running international politics.
There's a lot of lobbying going on a lot of topics, and oil is just one of them. So what you can talk to those. You mean the companies themselves, or the institutions that were just referred to? Yeah. Well, yeah.
Christel,
jointly try to do something about it, but it's not easy.
I
fully agree with
definitely
that.
Not. Yeah. Christel, give us your best street slugs.
I have things to say on all questions, but they're personal answers. They're not scientific.
That's all right. Personal answers are good. We can get scientific later on over
not,
drinks.
Yeah. This isn't science, right? This is how I feel about your question. To the first one, do we have to break the system or work within it? You're talking to a finance professor in a business school, so clearly I chose to work from within the system. And I think in the room there are many people who work in very big mainstream banks, so who've chosen to work within the system too. And I think both avenues are good, as long as you resist. I mean, if you manage there to. If I were alone in my business school trying to resist the system, I wouldn't manage there. Again, the idea of being several, at least, if you're going to choose to work from within the system. And we need people on both sides. About the street fighter, I don't know everything that's behind your question. My first thought was to say two things. First of all, we don't need a hero. We need, again, collaboration. So it would be the power of the many rather than somebody going out there and being a figure of ESG. Because I strongly think that although the methods of extreme groups may seem effective, we don't want to copy them. That is not the path to go. There's a totally different alternative, which is working together, and it's not catchy and it's not effective immediately, but it allows some deep long-term work, developing the tools, doing everything we talked about, so that the day when conditions are favorable again, we're there and we're ready, and the next step are ready. And lastly, to our colleagues in the US who don't have the possibility to choose or to voice their oppositions. As an academic, we have the same problem because our colleagues in the US can't speak up either. And a notion that's extremely important to all of us is academic freedom, and as long as we have a voice here, we can use it for others. Now, only if it helps, of course. So one of the things I do when I meet colleagues from the US is saying, what's most helpful for you, that we speak up or that we just keep quiet and wait for things to go better? Now, the scholars I spoke to who are in sustainable finance, so it's not a good representative sample, but they all say, please, while you can still speak, do it for us. So that would be a path.
Well, good, great, thanks, Christel. Andreas, what about my question about investors doing more to kind of invest alongside governments for solutions, make Europe
just
great
prepared
again?
for their questions.
Well,
But I'll come to your
it's the
question as well.
destabilization technique. You can answer their questions as well, Andreas. You can answer them all very quickly.
So, first, Mark, thank you very much for your work and for this work. There's a lot of investors in the US that are still very, very active. They're just not vocal about it in public, right? So the game is you do everything in private. The Calpers is nice. Oregon has a fantastic pension plan in the zero, for instance, right now. So they're not vocal, but fortunately, most of the pension money is run by the states. So still the vast majority of pension money is blue and not red. Then I absolutely agree with Matt that we need a different game. And the game is pretty simple. What does it cost to win a seat? That's the game. The rural seats are a lot cheaper than the city seats. The rural seats react to quite simple lines. Now, one of the things I think the left-wing parties will have to realize is that the right-wing parties learned the hard way they need discipline. Everybody needs to not go on air and say something that will make 80% of the population hate you. On the left, unfortunately, every time the right brings a topic where they know they have an easy penalty in football language, some MEP will go there, or some MP or some member of Congress, and will defend something that they think is morally correct, but they know in the polls is going to lose big time. And it's fairly easy for any TV channel, not only Fox, to find these people that they defend the morally correct portion, but they're not winning any votes. And so from an investor perspective, I do think we need to reshape the game a little bit, and the game really needs to go to return per unit of risk, which is fiduciary duty, which is the prudent person rule in the US. Now, risks can be reduced without any efficiency consideration, and basically any company that is successful in managing their sustainability consideration should have less risk. It shouldn't do anything to the upside. So the return risk ratio should actually increase. We have not spent any time on focusing on that. We are constantly measuring ourselves with the same alpha that Standard Finance does. We'd be way better using a so-called Sortino ratio. And I think we just need to emphasize that a lot more. And then we can have a smarter game. That being said, we should absolutely launch products, and we should replicate, as Diane-laure said, and that then effectively scales them over time.
Great, thanks, Andreas. Diane-laure, to wrap us up, give us a few thoughts on questions you had and... Well.
So I think I agree with you, but I'm also going to push back a bit on this risk argument. So if you look at the discourse by U.S. Senator Kentucky, who's pushing for the anti-ESG bill right now at the Senate, and I encourage you to watch this discourse. It's 2 minutes. There's an argument about financial performance, which is the SEC argument, of course, and this is what we've all been fighting to show the performance of responsible investment. But most of the discourse is not about that. Most of the discourse is about anti-woke, anti-climate, is ideological climate, is not a financial discourse. And I think if you look at the SEC and the conversation closely, they're in quite trouble to show that it's underperformed systematically because of the meta-analysis that many academics sponsored by FIR and PRI have done, included some colleagues that have been interviewed by the SEC and the Senate in the US. So research matters because this is translated in politics, and politics matter as well. So I guess it goes back to the street fight, and I'm not pessimistic. I've never been as optimistic as today as regarding the importance of sustainable finance. And I've been doing that for 20 years. When I did my master's thesis, I had to get an appeal to get this topic because an economist believed there was nothing like non-financials on the financial markets. So there was nothing existing at the time. But today, I'm really all in, as they say, because if they fight back so much, it's because it's a threat, okay? And it means that we have succeeded. And I say we as a collective way because I've received a lot of support from the industry, and both in Canada and in France. So I think it should be a call for us to keep going, to get organized. What's going right now in the US, they're organizing resistance movements among academics. That's things that Europe also can provide a safe space. This is also something you can do, provide a safe space for those academics, for those doctoral students, postdoctoral students who are now in the market without any job. and they need to go somewhere, you know, otherwise they're gonna not studying what they do. So I think right now we're in a very important moment, and that's for me the street fighters, is every one of us could be a street fighter at this point, you know.
Great, thanks for that, Diane-laure. Thanks very much to all of our panelists. Great discussion, thanks to you for your questions. And given this is the first ever time that I've felt like a Supreme Court judge, I would like to say, we vote to impeach the President of the United States of America.
Yay!